In this video, guys, we're going to look at the 5 key elements to a profitable trading plan. Stay tuned. Hey guys, warm welcome to you. All right, so trading plan, okay, it's not quite as sexy as setups, strategies, signals, all this kind of stuff, as charting things, but it is really the cornerstone and foundation of a successful trading career, or over a period of time, whether you're making it a career, a full-time career or not. I don't know anybody who's had continued success, or a level of success in the market, shall we say, without some kind of plan. And there are plenty of traders who have kind of dived in, done all right for a bit, and then been kind of kicked and spit out by the market because they don't have a plan. So it's going to take you a very little period of time to do it. It doesn't have to be huge. It's a little bit of time, and it will at least start you going. So very simple plan is all you need. Some guys go in and have reams and reams and sheets and different things. Some guys have it on a sheet of A4. You choose what's right for you. I will say I recommend keeping it very, very simple, keeping it very, very broad for now. You can always add some things to it later. So if you think you want to add something that helps you trade this specific thing better, fine, you do that later. So the first number one thing, guys, is your risk criteria. Yes, I know a lot of you laugh and stuff when I say keep your risk managed, guys, but ultimately you can have the most profitable trading strategy, but if your risk management sucks, you can wipe out. And they did this, they kind of did a kind of test. Professors have done this in all sorts of studies before, where they said, hey, this is a game, this is a coin, it's a 50-50 chance, you've got a 3-to-1 payout if you get it right. So it's ridiculously skewed in their favor. Here's your kind of chips, you bet what you want. And most people blew up over time because they either bet too much, which is the main thing. There's risk too much and didn't understand the concept of losing streaks, even on that kind of payout. You get the idea. So the point is, guys, you can have the best strategy ever, but if your risk management is not on point, it's pointless. It has to start with risk management. And that's not just a blasé, I risk this per trade, that per trade. That's a good start, but you need to go a little bit deeper. Again, don't spend ages on it, but just answer yourself the big questions. How much you want to risk per trade? Is that a fixed amount, or is that a percentage amount? Okay, that's okay. How many trades are you taking a day? So if you're a day trader, or a week, or a month, so how much will you risk per day, per week, per month? That's the question you have to ask yourself. And then, final question, where your circuit breaks. In other words, where you stop trading for the day, for the week, for the month, draw down from equity highs, etc. There's all these kind of different permutations and scenarios you need to consider in your trading. And this helps, number one, obviously with growth. If you have a bit of a down period, a drawdown, which happens, you're not going to have devastation to your account. The other thing is it gives you confidence to be able to execute and not worry that the market's going to completely nail you, because you have your risk management in place, you have your structure, you have your boundaries. I've done a video, guys, before where I've gone into a lot more depth on that. If you want to go check it out, feel free, but I want to keep it kind of broad for the plan element for this video. Second thing is your pre-trade routine. So if you're day trading, there might be, hey, do I write down the levels? Do I kind of make sure I've done some exercise? Do I clear my desk? Anything like that. Swing trading could be, is there any earnings coming up? Again, day trading as well, but just ideas, guys. Any earnings coming up for the stocks I'm trading, any economic data coming up for the currency pairs I'm trading, any holidays coming up, anything special that I need to be aware of, any headline risk. And that could just be kind of pre-trade routine to get you feel like you're being prepared for the day. A little bit similar, but not quite the same as your trade checklist criteria. Those of you who kind of been around a while, and appreciate your support, by the way, if you have, know that I have a filter and trigger process. I like to filter my trades, and then they come into my kind of trigger ecosystem, if you like, and then if they set up from a price action, short-term price action perspective, I'll pull the trigger and take the trade. They may go to the filter process but not the trigger, but they'll never go to the trigger process without going to the filter process first. That's just the way I do it. I don't say that's the right way to do it, guys, but it works for me. You may have something different. However, I do still suggest that you have a criteria, a checklist before you take the trade. And that could be something as simple as if you're a day trader of USD JPY, Euro USD, Cable, DAX, Dow, maybe you have a range criteria. The market's got to be in the minimum, the current ATR has got to be a minimum of this before I'll even get involved in it. If you're a trend trader, the trend's got to have been persistent for the last 4 weeks. If you're a kind of news-based trader or an earnings-based trader, the gap's got to have been X amount. If you're like a big mover trader, a big gapper trader, it's got to be X amount. There's going to be some criteria that really means that you're trading the right trades for your strategy and style. And I can't overstate this, guys. You know, it's so important to be trading the right tool for in the right market. So think about that one. The fourth thing is your trading strategy. So this to me is something it is another kind of its own little thing elsewhere, but plugs into your broad plan. So this is going to be, you know, what you're looking for entry. You're trying to buy and pullback, so you're trying to trade mean reversion, you're trading double tops, you're trading with Bollinger Bands, you're trading with RSI. You know, how much size you're trading, what's your exit criteria, what's your scaling criteria, what's your review process for each of the individual trades. You know, this is something that should probably live in its own section elsewhere, and then you plug that into your plan. So you work on your strategy elsewhere, you work on your triggers, you work on your entry, and then that comes into your broad plan. The fifth thing is your out of hours homework. This is something that can separate you guys. If you're putting the effort in out of hours to review your trades, to journal your trades, to review the market conditions, to put that additional work in, as well as clicking the button, and you plan it and you say, hey, I'm going to do, you know, 15 minutes of journaling. It doesn't have to be horrendous. 30 minutes of journaling. I'm going to look at the markets at the weekend. Because if you allocate time to it, then you're just going to accelerate the learning curve. You're just going to be better. And if you're already doing well at the market, you're already profitable, this will make you improve you quicker. It will get you to the next station quicker. Again, I don't know anybody. Do you have to do all these things? No, of course not, guys. But just sharing with you what I think works. I don't know anybody who has success in the market who doesn't put a lot of extra time in outside of the markets, analyzing their trades, analyzing the markets, analyzing conditions, analyzing patterns, finding new edges, and then implementing them in their trading as required when they start trading, when they start kind of trading on the out of hours session back into the in hours session. All right, guys, take care. See you in the next one. Get your risk manager, whatever you do. Bye bye.